investment thesis a little bit. I know you've been involved in a lot of different types of deals, big real estate, small real estate. I know you've got some businesses you own in Africa as well. So I'd love to hear a little bit about that. But I mean, Jared, why don't you start off by introducing yourself a little bit, who you are, your background, and what you do?
Yeah. So Jared, and I actually came from nuclear power. Was my last full-time real estate investor. I went from being risk adverse to evaluating things like triple checks and everything, and then moving into real estate, you got to kind of shift investor. Took some classes. Jerry Norton, I forgot to mention that earlier, how to flip houses, and just being a project manager really being in business. And the downturn was very lucrative for me. Everybody was scared. I decided to plow ahead, and I got a lot of great deals. I wish I could do it again, but that for now, with the Jerome Powell, my buddy, raising interest rates and making it very difficult. But that also got me into multi-million-dollar commercial, large development deals. And then Black Card just opened the door to meeting lots of great the world, UK, Canada, Europe and other places, and perspectives, and very smart individuals. So I appreciate what we have in Black Card, which has been, it wasn't advertised as much that there's such a cool community, but be like a really good benefit.
Yeah, we got a lot of high caliber people. It's great. Well, look, so you've syndicated a lot of deals, right? I know you've done a lot of single family flips, and now you're kind of, segueing into more larger commercial real estate deals. Talk me through, a lot of people say it's just as easy to do a big deal as it is a small deal. Some people say it's easier to start out small. Like, how do you think about that from an investment lens? What's your theory behind that?
Absolutely. I think big deals are better. They lend themselves, just even opens doors for you that you didn't even know existed. Some people won't even touch you unless thesis. Some people won't touch you unless you got $100 million thesis. And so really, if it's possible and people are doing it, I want to be a part of that. Open my mind of thinking about when you're on fund one, be thinking about fund 2 and 3, learn that for hours. And that really opened my mind to just start really taking seriously across my desk, and then not thinking about how much it cost, but if it was possible, and realizing there's a whole market of very wealthy and lucrative individuals who want to invest in me. And so it's just really that belief and understanding that security and the team and the profitability bound, and just to think bigger. And so I've done that, and it's really been great.
So so also on the not only on the acquisition side, but also on capital raising side of things. Some people just have one large investor that they raise a lot of money from. Some people self-fund all their deals. Some people have a lot of smaller investors, and it kind of fits into the type of fund structure that you have. But what's your preference? Do you like working with smaller investors, bigger investors? Like what's your what area do you like to play in?
I'm in transition, honestly. So I'll tell you where I'm at, where I was, and where I'm going. I syndicated a lot of deals with the 3Fs. What is it? Friends, family, just friends and family.
Friends, family, and fools.
Yes, friends. But yeah, we did really, really good, and I really helped out the people that believed in me and believed in. I performed 100%. Every deal, they all made money. Every deal, and next deal, we got money. And so your relationship and your reputation will increase, and then people kind of know that. Then you begin to get trusted, and then bigger deals, they introduce you to bigger people, and then you're into the 100 million is normal for those people, which that's hopefully becoming more normal. That's
Yeah.
kind of where I'm at.
Well, no, I mean, you're spot on. You know, there's this natural escalation in the fund world, right? Where you typically start off with the three F's: friends, family, and fools. You know, then you'll start meeting with a lot of high net worth investors, right? You can raise, check sizes of 100,000 or 250,000 or, excuse me, maybe as high as 500,000. And then you start, meeting the larger LPs that, or even, smaller family offices that can write checks of anywhere from 1 to 10 to 20 million. Right. And then you get, to institutional grade investors. I've had a couple of conversations with some large allocators over the past couple of weeks. I spoke with actually a pension, a sovereign wealth fund. And, I was talking to them about their minimum check size, and it was 3 to 500 million. Right. So then you start to play with those types of people. So there's this, in everyone's journey, I love what you said, you start off small. You start with yourself. Investing is the best place to start, and then you can grow and start meeting higher and higher caliber people. So, something that we talk a lot about, I'd like to transition to is, these funds, right? So I know you've syndicated, right, a lot of single asset opportunities before, but you've been transitioning more into the, the fund mindset. Walk us through and, talk to us about, how you think about a fund and how maybe that paradigm shift has helped you a little bit.
Well, it's all about scaling. And so funds have actually opened the door to lots of things that I didn't foresee. A Reg D 506C fund, and learning all the intricacies of Kim Kardashian getting busted and, having to pay that SEC fine, which is nothing for her. Learning the way to syndicate in a more broad, open-based fund, real estate back. What people are interested in, just seeing what the market is, and what it was take a syndication that month to where I could do a $650 million syndication. It's not a fund, but it's more like a project. I call it the Walther Regional Transformation Project, and it's an area that are all related to housing, 3D printing, some river development, and my own skyscrapers. I might put Walther Tower on there like Trump. I don't know. I like to have my name up there. Hey, Dad, look at that, kind of thing. It's like, that's for you, Dad, right? My city's begging me for do these projects. They've already primed the pump. And I've high net family offices that I've actually been approved for that. It's not, but it also, that gives you credibility back to going to funds of building team and well-known people and people you don't know, but run hotel chains of great money raisers and networking. And there's just so much good activities. It's actually tripled or 10x'd my syndication space there, depending on where the money's coming from, what they want. Do they want to be in a fund, or do they want to be a syndication? Ambivalent. But now I've got an extra tool in my pocket to say, oh, we'll make this a fund or to whatever makes the person that's my partner happy. So that's added to me. So I really like that.
Hey, I mean, you're spot on, right? Like, there's pros and cons with each, right? With, from a syndicate to a fund, there's more limited liability from the LPs. They're coming in as limited partners, right? But some funds, they want discretion over the assets, right? Some allocators, they want discretion over the capital that they're allocating. They want to be involved in the day-to-day, and others, they don't want anything to do with it. Right. So it's really about catering your investment opportunities to these LPs and, putting together a deal that makes sense. So, Jared, why don't you talk to us about some of the deals you've been working on recently? I'd love to hear more about that.
Well, yeah, I mentioned a couple of them. Of mine. This is one that just popped up from a post in Slack. I'll call them teammates, compadres, I don't know. posted, "Hey, I've got 150 million." They call it BTR. And I had just finished a conversation with an acquaintance friend who absolutely does that and got caught in this kind of, whatever you want to call it, downturn, or where he's got millions in assets and can't get the money out. And let's call it the machine. And he needed 2 million ASAP, and he needs, a buyout million. The whole thing is 190 million. It's like 5 developments in different, and I was able to whip up the paperwork, whip up everything I needed, the pitch deck. Pretty good at pitch decks, but Black Card helped me refine that focus with the ask, the question, the answer investors are looking for. So I got more honed in and refined, and I was able to do that in like 2 days. And now family offices are looking at it. They like it. I'm in discussions right now. They may not do it. But just things like that, to be able, how I was successful flipping assets, and I was first, and I still am. Like I'm quick. It's because you know your investing parameters, your box, and then as soon as a deer, let's call him, you shot that sucker, and he's yours. You bag that one because you don't want deals to walk away from you to pull the trigger. So I'm very biased towards action, and not just action. I was a nuclear engineer, a thorough, thought through, and basically I'm in a duck, guns just pointed in one part of the sky, and a duck flew, and they're like, "Wow, how are you so fast?" I'm like, "I'm waiting for my eye," and I shot it. So don't think I'm fast. I've learned to be ready for great deals as they come, and with this downturn, they'll show up. So that's one that's in process right now. That's could be really, really lucrative. Thing could come of it, but I'm going to kind of investigate and push until I find out stuff. That's one of them.
Well, no, I think you'd bring up a great point. I've never heard that analogy per se, but I love it because I mean, I feel like too many, emerging managers or operators, they're just aiming all over the place, right? They don't really have a direction. They're getting distracted. They got shiny object syndrome, and they're jumping all around and looking at all these different opportunities, and they end up doing nothing, right? You chase 2 rabbits at the same time, you don't catch any of them. So, and I think that's crucial, in your early stages of, developing your investment practice and investment business is, set that target, right? Set that buy box, become an expert at, whatever you're doing, and you're going to build clout with investors. I was just listening to a podcast yesterday from, his massive fund. And, he just started with term loans. He didn't know anything about, he just did collateralized loan obligations, right? As his first fund. And, it's nothing crazy, but he just, issued collateralized debt. But he, consistently returned money to his LPs, gained their trust, gained their confidence, and then he launched subsequent products. And I think that's the best way to do it. So I think that's great. I love that. Well, let's, anything else on, your core investment beliefs, or how you think about the market, or anything that you'd like to tell the world about your investment practice?
I'll give another example that's coming to mind. My first commercial property that opened the doors realm, it's a mixed use. I was actually at it just a second ago, and I'll probably be working on something in a minute. But it was a mixed use, 3 commercial spots and 20. It's got housing allowance benefits from the Section 8, but it's like it's helping people get a home. They pay like a third of the rent, and it's a master lease, so they're all leased up. And there was like 1 vacancy down there. I met with I guess what I'm saying is, because I'm old school and I say what I mean and I mean what I say, he could tell that. He was 83. I was 40 at the time, but we had the same, we mean business, and I'm here not to screw you over. And people can figure that out after a while, of the world. But we resonated, and he gave me seller 20-year amortized for $250,000 down, and he wanted half down. So I raised from my other syndicator the 125, and I put zero net worth $5.7 million just because I raised the rents and do what you can. There's good commercial people out there. Peter Harris, Commercial Property Advisors, is who I share on the subject. So I just did everything I read and learned about, and then I put it to 5, and it was really undervalued. It was probably worth 4.2 in the 80s, probably for 300 to 500,000 back. And for him, 500 to 2.5 was a great deal. For me, getting up to 4.9, and today at 5.6, 5.7, it's a great deal. Seller financing, creative financing, just working with people as they want better for them. There's a big shift happening. I just want to briefly talk about those of us in our 30s, 40s group, baby boomers, 60s, 70s, 80s, that want to offload their assets. They want to do seller feasing of avoiding large taxes. So they become the bank, and then the money just existing because they own it in cash. They find a guy like me, he loves it, and then it's a great partnership, and then they make great money. Anything just being in the banks. So those are a lot of opportunities out there right now in this market. One of my proteges, he's about to pick up a $700,000 12 unit. Same process. He's going to make it worth $1 million, and lickety split. He's 25. Give me all of his profit. It's thanks, but whatever. I just like to help people. So he's going to. So yeah, that's the market right now. I think multifamily is the place because people can't buy, and then people want to get rid of their multifamily because they're just 73, 78, 80 for them.
Yeah. Well, I mean, a lot of people look at a market like this and, they say, well, I can't raise any money. It's sour fundraising environment. The market's down. People are scared. There's recession. And, I can somewhat empathize with them, but simultaneously now is when the best opportunities are there, right? Like you have the opportunity to buy deals at discount. When people, are when others are greedy, what's that Warren Buffett saying? Be greedy when others are fearful. Yeah, that's right. So, I think it's an awesome time. So, and, it's cyclical, right? Our markets are cyclical regardless. So, what better time to get out there, get a name with for yourself and grab the bull by its horns and try to knock down some deals. So I think that's great. I think that's awesome. Let's shift a little more. I'd love to hear a little bit more about your, your personal life, any habits, I know you've got so many different business ventures going on, how you squeeze a personal life into that. Why don't you share a little bit about that?
In that I'm married for, I better do the math right, 2005 to now, 18 years, something like that. You're supposed to know. And I got 4 kids, 12, 10, 42, thinking about having another. So family and balance is really important. Family really balances you. But I found this, and I read this other day in there's like people that stay up late and wake up early in vain. Like a good deal sells itself, and they kind of have momentum all on their own. We don't actually need to be so involved as much in anxiety, driving, maybe emerging investors. But good deals are good, and they kind of have their own momentum. If you're the momentum, then the deal's not good enough. And I numbers or get a different deal, and maybe that's one you shouldn't be, putting so much weight behind. 3:52 and Pacific time. I'm done at 5. I don't care what needs to be done. I'm done at home. Now I work for myself. I run all these different businesses, but I personally make myself, they're not going to get cut out because dad needs to keep trying to work. Balance of having parameters in your life and putting your phone on silent, having time for you, and then community and socializing. Like, that's important. We don't need to be like a machine deals. I find that I'm actually more productive, rested, and full of life tips and other things that really propels me. When I get back into the saddle, I'm refreshed, out working through Friday, Saturday, Sunday, Monday,
Mhm.
and then just really not paying attention. They die early, like really not paying attention to like taking care of yourself, taking care of your sleeping well. So I really try to have limits, and it's like much time on the machine, and then you got to shut it off, right? But
Yeah.
go back to it
Well,
later.
well, Jared, I've known you for several months now, and what something I appreciate about you is I think you do. You always find time to be present, right? You're always networking. You always have your camera on when you do like group calls. You're always raising your hand, and I think it's really benefited you in a lot of ways, and giving you opportunities to be involved in deals you otherwise wouldn't have.
Absolutely.
Do you have any philosophy around networking and maybe advice for others? Because face value, I think you've done a tremendous job at that.
Okay, there's a little secret I have to tell people. I've trained people how to make videos, and I've also led small groups at church for like 20 years. So I understand, and I know what it's like to have non-participatory participating, and so I'm really doing that as not just for me, but I always try to have a thoughtful question. I always try to be engaged. I always have my camera on. Because I find a lot of value, and I'm here to give value. And I think really just prompts other people to learn. Now, maybe they're not part of a church or a network. Maybe they've never really been a part of that, but they are a part of it now, whether they realize it or not. That group. And so really just engaging and helping the coach, like you on your Monday call, whatever, whoever the coach is, and just I'm there to kind of serve and help stir there's a lot of good creative talent in there. I know there's a lot of good questions, but people may be afraid to sound stupid. It's fine. We don't, but we may learn, and you may have a gold mine nugget idea that we need. It's one of those things where I think it's worth the risk to engage, participate, turn your camera available. I put all the Black Card office hours on my calendar to be there. So I just considered it part of my required. Nobody told me to do that, but because I need fun and I need to learn. Now the videos are great, and I show almost all of them, but there's that intangible thing that you get being part of the office, not replaceable. It's an intangible. You don't know what someone's going to say. You don't know what you're going to say.
Yeah.
It brings life. So yeah, that's my answer on that.
Well, that's great. I love it. Appreciate it. I know I caught you last minute before hopping on this today, and I appreciate you being here. But where can people learn about you and your business, and if they want to touch base with Jared? Well,
LinkedIn is always good. You could Google my name, Jared Walther. It's a nuclear history. It doesn't tell you the whole story, obviously. It's kind of like I will have more information about the Kenya project. I really didn't talk about what happened when I've been working in Kenya doing missions for like 20 something years, and gaining reputational relationships. I met with the governor. We're going to pull the dollar infrastructure package for roads, hospitals, ambulances. They're having a big problem, just deaths or complications. So the governor really wants to focus on care or 2, 3, 4, 5, building housing and things like that. So doors are really not a business per se. It's more nonprofit, or as they say in the fund world, ESG, be political. It could just be nonprofit work. It doesn't have to be an ideology political profit work is kind of my opinion. So I'm not afraid of the term. I know it's kind of gotten a twirl, but I just tell people, hey, my ESG is nonprofit work that everybody probably not have an issue with. So that's
well, I know you've had several businesses and ventures over there. So yeah, we'll have to have you on again and get more into that. I know today we primarily focused on real estate and commercial real estate, but we'll definitely love to have to hear more about that. But Jared, thanks again for your time. I know I caught you last minute today. Really appreciate you jumping on and sharing your story a little bit with the audience.
No problem. Hey, thanks for having me. And this was a Slack post that was just posted. I'm checking Slack and I'm like, I do, or I said we do, because I got a team. And this is literally told you guys being active in the community and being connected. And then he's like, hey, let's do this thing. Minutes. I'm like, deal. I'll rearrange my day.
Yeah.
I see value in this. So then I did. And here we are.
Well, I love it. We love to have you. Love to see you around. Well, appreciate it, Jared. We'll be in touch. Thank you for sharing your wisdom today with everybody, and we'll talk to you soon.
Thank you.